Wait. Hey everybody, it's Sam Bauer. It's like musical. We're playing musical chairs in here today, but I am super excited. I'm here today with the Giza group, and really excited to introduce you to these guys. They're with Cross Country Mortgage, and I've worked with Kevin pretty much since our agency opened. Kevin and I met through mutual friends, and he was kind and gracious enough to allow me to come in and meet with his team. And since then, we've grown a pretty good relationship, and we've done a lot of work together, and I think the world of these guys. So I wanted to make sure that the realtors in our group and the clients in our group got a chance to know them, because they've transitioned recently from kind of like, in the insurance world, we have captive agencies that can only write with one carrier. And then there's independent brokers, which is what I am, and I represent 40 different companies. So the same thing happens in the mortgage world. If you go to a bank, you're going to get the bank's program, and the employees of the bank work for the bank. Where if they're a brokerage, they can offer multiple different solutions, and they really get to work for their client. So if I know Kevin and his team at all, that's probably the main reason for their switch. But so I thought this is Jordan Beck and Kevin Giza and Nick Kessel. And so I'm going to let them talk a little bit about, I said your last name wrong, didn't I? It's Kissel. Nick Kissel. And I'm going to let them talk a little bit about like the transition and what you guys do here and what makes it a little bit different and unique compared to maybe other lenders out there whenever people are looking to figure out who they should get pre-qualified for on a loan. So Kevin, do you want to tell us a little bit about what you guys are doing?
Yeah, sure. And, we appreciate you taking the time with us today. And we've always been a big fan of what you do, and you've done such a great job for all of our clients, so we appreciate that. And we really like just how you basically operate your business, where it's client first, and you want to really make sure you're taking great care of the clients. That's sort of what we try to do here at Cross Country, and we really made the move here just to be more client focused, and we wanted to make sure that we could have a lot more products and service and be able to close faster and be able to do the things that our clients need. And the Cross Country is a great avenue for that. So.
Yeah, that's awesome. Jordan was telling me before we started the video that he had a closing that got cleared to close in 9 days, which is, I haven't heard that lately from anybody. So is that normal, or is that?
No. So that's not it's not the norm.
Perfect storm.
Yeah, it was definitely the perfect storm. It took everybody on the team, but it was definitely a record-setting closing for me, and even here in general, I think that we can get them done typically in 21, 22, 25-ish days, which is light years above from I think what we're used to.
Yeah, it's weird. Like anything with big corporations, right? It seems like there's so much red tape, and then when you have the opportunity, and is it similar to insurance where all my carriers that I work for are fighting for my business, so they're easier to work with because they want me to write business with them. Is it similar in the mortgage world where you've got maybe more than one mortgage shop that you're trying to write with that they?
Well, no, that's a great point, because we have a lot of different investors that we can use. So,
okay.
We're not just tied to one bank, and so that gives us a whole range of products that we can offer. And so, as you know, clients and their lives are unique, and businesses are unique, and so not everybody fits into a little box, and so we have the ability to be able to go outside that box and get things done.
Yep. Yeah, that's one of the best benefits of having choices and options, is you can really learn about your clients, figure out what is unique to them, and then try to find them the right spot. So that's really, really cool. I wanted to ask you another question, and it just fled my mind. It was about, I'll skip to a different question for now. So if I'm a realtor and I'm watching this video right now, why do I want to do business with the Giza Group instead of another lender that's up the street?
Well, we like to think that there's a lot of reasons why, but Cross Country gives us the ability for a lot of different products and a lot of different service to be able to close fast. That's always really important to a realtor, because the sooner you close, the sooner you get closer to payday, and so that's just the reason why you work. And so, but on the other side is it gives us the ability to have a smooth transaction. So there's nothing worse than, getting a pre-approval letter and thinking that this client's pre-approved, and then it turns out that they're not, or
Right.
there's some issue that there wasn't basically diagnosed, or they didn't spend enough time doing a proper qualification,
Yeah.
and so then the agent's 20 days into a contract, and now all of a sudden this issue comes up. So then they got to go back and they got to renegotiate with the seller, try to ask for more time, and it just ends up just making the whole transaction just very, very difficult. And so we try to really be thorough up front to make sure that we're getting the best analysis possible, so that we can make sure that your clients go to closing as fast as possible and as smooth as possible.
Yep. That's very similar to why a lot of lenders work with me, right? It's all about speed and making sure that we get to the closing table on time, and that there's as few hiccups as possible. And if somebody can be working with you guys, knowing that that's going to help them get there, like, that seems like a good reason to me, right? It makes the client happy, it makes the realtor happy, you guys are happy, and it just, like you said, the smooth transaction is so important.
Yeah, it's really all about getting to the finish line,
Yeah.
and so we help you get there, and that's really what everybody cares about.
Yeah.
If they want to get there, and we're dedicated to making it happen. So.
Yeah.
Yeah, and to kind of piggyback on that, we have a lot more options here, which we touched on earlier. But the array of programs, going outside the box where certain lenders can't do that. I often say 85, 90% of the things that come across my desk, Cross Country has a program for it.
Yeah.
So a lot more options.
Yep. So let's bust some myths. Nick, switch me sides because I feel like I'm on the cookie jar. So I'm gonna say some things that I've heard or that I may think about mortgages, and you guys tell me if I'm on point or if this is a wrong myth. So in order to get a loan, I have to have a 700 credit score or better.
False.
What at Cross Country? What's the limit we can? Not that I want
It depends on product, but we can go much lower than we used to be able to. I think, in the big banks typically they have those limits where it has to be 700 or 6 this, and there's plenty of options available for customers that don't necessarily have the best credit.
Yeah.
I can say we've done them in the 5s.
Yeah.
Okay.
Yeah.
That is pretty low for being able to qualify for a loan. So if somebody has lower credit, do they have to put a bigger down payment down? How does that work? Is there a balance there?
Not necessarily, but again, different loan programs have different, guidelines. But no, not necessarily. On an FHA loan, oftentimes you can still put the minimum of 3.5% down.
Okay.
It all depends. It's no person, no loan is the same.
Okay. All right. So I'm in the loan process and I'm applying for a loan, and I have a really good debt to income ratio. So my debt is really low and my income is abundant. It's okay for me to go ahead and buy a car, right?
Yeah, well, I think we've all seen sort of the horror stories of that. So we always try to really counsel and, basically let our clients know that, once you start the process, please don't go out and get any other debt, because your approval is constantly changing, and we actually monitor your debt. And so we're constantly watching, that until we get to closing. But the thing that comes up the most is furniture. Because you're buying this new house, you're excited, you want to go and get furniture, and so you get the 0% deal that everyone's so happy about. Well, if you do that prior to closing, that could become an issue, because then we have to take that payment and we have to factor it into your debt to income ratio. So if you can, always try to wait until after closing. But if not, you got a deal that's too good to pass up, just consult your loan officer, and we can make sure your ratios will be fine, so there's no extra surprises at closing.
Yeah, and you always want to just make sure you do keep your loan officer informed. And it's not necessarily that it's going to ruin your debt to income. Like you said, it was abundant and you're fine, but what happens is it now has to be pushed back through underwriting. They now have, it can cause delays. Right? Exactly. Yeah. So if you're coming up on closing and then you open a new account, you could delay your closing by doing that.
Yep. So what are the things like buying a big purchase on credit, or quitting your job changes, right? That's a big one that I hear that can delay things. what are the other big things that once you're kind of in the process pre-approved that can kind of throw things for a loop from a consumer standpoint?
Well, the job change is huge.
Yeah.
So, and especially if you're going to go from being a W-2 wage earner or hourly or salary, and then you decide, hey, I want to go out on my own and be a business owner. If the bank doesn't have 2 years of history, then it's going to be really difficult for them to give you credit for that income because they have nothing to base it off of.
Yeah.
So that is the biggest change. Now, on the flip side, if you go from being a business owner to going to being a wage earner, not as big of an issue because now we have that guaranteed wage and we can get the contract.
Yeah.
But that's one of the things I can tell you, especially with COVID and people, everything that's been going on. We've had a lot of clients that have, been let go or started a new job, and there's a lot of great opportunities for employment right now. You see all the contracts out there, and there's more jobs than probably people who want to work right now. And so this is a great opportunity for people to find new jobs. Well, when you're in the middle of a mortgage process, that changes everything.
Yeah.
So we have to pretty much start over from scratch with a new employment history, and because your income's changing, the structure's changing. So
Yeah, so get your house closed before you change jobs, guys. If you're looking to do that, I know we were actually on a Goosehead does like a weekly call it's like a training call, but they were talking about this year being the year of the Great Resignation. Like everybody's been quitting their jobs and trying to find other things. And so I was thinking a little bit about how many times I've had homeowners insurance ready to go, and then we've had to push it back because something happened during the process. So I guess just know if you're going to do anything that's going to change your income, it's going to change your credit score, it's going to change your debt to income ratio. Those are all things you want to call and ask. Or if you have questions like this, guys, call these guys and ask them. They're more than happy to help. And then my next question is it really important to get pre-approved whenever you're looking for a house?
Crucial. Yeah.
What does that look like? Like a pre-approval, does it take a week or two to get done, or is it a pretty quick?
Very quick, same day. Sometimes as little as a half hour to an hour. And I would definitely recommend that be the first thing you do. A lot of realtors don't really want to waste their time with a client that's going around kicking tires and looking at homes. They want to know that they are pre-approved.
Yeah.
And there is a big difference between being pre-approved and being pre-qualified. And I think, especially in Pennsylvania, a lot of people will basically assume if you're pre-qualified that you're pre-approved. And basically, and that's fine. That's really usually all you need, as long as you haven't had a bankruptcy, you're not in the middle of a divorce, any of the major credit issues, a foreclosure, anything like that. That would primarily be satisfactory for most agents. However, if you're a little bit concerned about your credit history, or if your income's going to qualify, we can actually take it one step further, and we have a fast track approval process where we can take it and we can actually have you submit your application, move it to an underwriter right at the beginning, have it approved, and get your mortgage commitment for you within, right before you go. So now you go out and you have a mortgage commitment. So as soon as you find a property, you can close within 2 weeks from that date.
Oh,
So,
wow.
yeah, because a lot of times people do the pre-qualifications, and some of them, to be honest, really aren't worth the paper that they're written on. The loan officer might be new, it might be quick, it might not know what they're looking for, they may have limited information at the time. We just had one that was pre-approved from one of our competitors, and the guy, the client worked as a roofer, and that's a very seasonal employment,
Yeah, my dad's
right?
a roofer.
So when he got pre-approved, he was 40 hours a week, but now, weather in Pittsburgh, it's starting to get bad, so now he's down to 32 hours a week. So we can't give him credit for 40 hours when he's only working 32.
Right.
And so now that took a lot, and so we were able to handle all that up front. We were able to get it looked at by an underwriter, get it approved, turn around, get a commitment out, and we ended up getting it closed in 2.5 weeks, which was pretty.
That's amazing, and I would imagine that's a huge tool for realtors if their buyer has this pre thing that you just talked about. Sorry, and they know that like the seller, if the market stays the way it is, where there's way more buyers than there are houses for sale, it would give you an edge on maybe getting chosen to buy that house.
Yeah, absolutely. So this year, everyone will know that we've seen a big issue with inventory, right? And houses were getting 15, 20, 30 offers sometimes, and so how is your offer going to be different than what they're seeing? Well, number one, the loan product could be a big difference. If you're conventional and you're putting 20% down, you have a stronger offer than if you're putting 3% down. And so, but the other thing is now, if I come in with a commitment letter, and it's basically saying that it's already been reviewed by the underwriter, all we need is a property address, and we're going to closing, you're pretty much ironclad to be able to go ahead and move forward. So that seller knows, hey, this has already been reviewed by an underwriter, and they're going to move forward and close as fast as possible.
Yeah, that's an awesome tool. And is that unique to cross country?
Well, our fast track program is unique to cross country. Some other lenders will do a pre-approval similar, but I know that for us, we really sort of perfected the fact to get it done so fast.
Yeah.
Because a lot of times, like when you submit a mortgage application, there's a reason why contracts are written for 30, 45 days, because it takes a while to get through their system, get the information into the underwriter, have the underwriter review it, and everything sort of goes on a conveyor belt.
Yeah.
So we're able to fast track that and get it done really quickly for you.
Yeah, that's amazing. That right there, to me, guys, if you're looking for a house and you want to have an edge over the other buyers that are out there, give these guys a call. And they'll be able to help you with that. Now, one last thing, we're probably over 10 minutes, but, oh yeah, we are. What about refis? If people start refinancing, is it still a good time? Are the interest rates still?
Yeah, absolutely. Yeah, maybe they aren't historic lows, which that term's been thrown around a lot, like they were, a year ago, even, earlier this year. But yeah, they're absolutely still tremendous rates. Yeah.
Yeah, and people, and I think we talked about this yesterday. There's always home improvement needs. You always have kids going to college. You may have a situation where business didn't work out, and you have to maybe take some of your own personal finances to help with the business. You may have to, there's just so many different things that come up, and a lot of clients, most of their net worth is in their home.
Right.
And so how do you access that money? Home equity loans are great. We don't personally offer those here, but there's a lot of local banks that will offer home equity loans that'll help you access your home's equity. But we do refinances where if you know for sure you're going to have a home improvement project and you got contractors going to take $20,000, or you have debt that needs consolidated, or you have a kid that's going to college, look at the refinance first, because a home equity loan, most of the time they're variable, and second, which means the interest rate can change, and second of all, the terms, sometimes the rates can be higher than what you would get on a fixed rate mortgage, especially if you want a lower payment and a longer term amortization. So when we do a 30-year mortgage, our rates are most of the time a lot lower than what you would see on a second loan, because that's the other thing is, when you're in a home equity loan position, when we do a mortgage, we're in first lien position, where the home equity is in second. So there's a greater risk to the bank, so usually the rates are higher there. And if they're not, it's because they're probably variable. And so then what do we know? Ever since COVID, we got this $2 billion or $1 trillion stimulus coming out, right? And so what do we know? Mortgage rates have to go up. Right? And the prime rate is the one that's connected exactly to that, and prime is connected directly to home equity loans. So that's where you're going to start to see another, major reason why mortgage refinancing is a true benefit.
I hadn't heard that explained that way before. So I think that's a really good point. If you haven't refied yet, but maybe you were looking at taking a home equity line of credit out, check with these guys first, and see, what the refi looks like versus that, and weigh it out and make sure that you're making the best decisions. And again, the Giza group from Cross Country Mortgage, these guys have been doing this for a while. They're not new to the industry. They're very knowledgeable and they can answer questions. So I'll put their contact information in the comments. And thanks for watching. Have a great weekend. And
thank you.
We'll talk to you soon.
Thanks for having us.